What you're looking at is the total dividends that I received since I started investing, and this is the total gains of my portfolio as of August 31st. Combining these two together will show the total return of my portfolio. With the current market trending down in the red, I'm pleased to see that these stats are in the green. Now, not all of my stocks are winners. Let's see which stocks are carrying my portfolio and which stocks are slowing it down. Starting with my consumer discretionary holdings, these are Target, Starbucks, and Home Depot. Right now, my Home Depot stock is actually down by $108. I have 5 shares of Home Depot with a total value of $1,486. The total dividends I received from Home Depot is $20. Next is Starbucks. I have 20 shares with a total value of $1,684. Currently, I am up by $104 and the total dividends I received is $16. My Target investment is also down, and I currently own more than 10 shares of Target with a total value of $1,763. I'm currently down by $429, and as of today, the total dividends that Target gave me is $19. These stocks are fairly new to my portfolio, and I've been building my position by dollar cost averaging consistently. So far, every time I increase my position, my cost basis goes down, and it increases the dividends that I'm going to receive. Next is communication services sector. These are Meta, also known as Facebook, and Google. These stocks have been declining year to date, and so far, these are the stocks that are pulling my portfolio. I currently own 9.4 shares of Google with a total value of $1,018. I'm down by $244, and I'm consistently dollar cost averaging down to pull down my cost basis and increase my position. Google has been facing a lot of headwinds, but I believe that these are just short shelf life headwinds. Since I'm investing for the long term, my portfolio can weather down these headwinds and wait till Google recovers. Next comes the heaviest of them all, Meta. Right now, Meta is pulling my portfolio really hard. I have about 8 shares of Meta with a total value of $1,280. And right now, I'm currently down by $1,080. Meta has been a really big and heavy anchor that slows down my portfolio, but I still dollar cost average down because like Google, I believe that Meta is facing a short shelf life headwinds. Moving on to my real estate stocks, these are my monthly dividend paying companies. They are Realty Income and Stag Industrial. Looking at Stag, I'm currently down by $314. I currently own 51 shares with a total market value of $1,548. Monthly, Stag pays me $6.23, and the total dividends I received from Stag is $94. Next is Realty Income. Right now, I own more than 35 shares with a total market value of $2,429. Right now, I'm up by $235, and monthly, I receive $8.88. And the total dividends I received from Realty Income is $171. In the healthcare sector, we have Johnson & Johnson, Pfizer, and AbbVie. Let's start with Johnson & Johnson. Right now, I own more than 13 shares with a total market value of $2,249. And I'm up by $15. Quarterly, Johnson & Johnson pays me $15.62, and the total dividends I received from Johnson & Johnson is $54.13. After Johnson & Johnson, we have Pfizer. I currently own more than 40 shares with a total market value of $1,871, and I'm currently up by $188. Pfizer also has a quarterly dividend, and recently, Pfizer paid me $16.38. The total dividends I received from Pfizer is $72.87. Next is my highest yielding stock, which is AbbVie. Right now, I own more than 14 shares with a total market value of $1,938, and I'm currently up by $234. Quarterly, AbbVie pays me $20.06, and right now, the total dividends I received from AbbVie is $108.43. Before we move on to the next stock, let's talk about the 6th dividend payment that I received last month. These are from Starbucks, Realty Income, Stag Industrial, AbbVie, Apple, and American Express. With a total value of $55.53 compared to last year's $45.92, I'm up by 21% or $9. Dividend growth investing is one of the best ways to build a truly passive income. It's a strategy that will snowball and multiply the growth of your portfolio the longer you stay invested. The exponential growth of our portfolio comes from reinvesting the dividends, increasing the total return of our portfolio. Going back to my portfolio, let's look at my consumer staple stocks. These are Coca-Cola, Kroger, and Pepsi. Starting with Kroger, I own more than 40 shares with a total market value of $1,947. And right now, I'm up by $244, and currently, Kroger pays me $10.45. The total dividends I received from Kroger is $35.18. Next is Pepsi. I own 12.66 shares with a total market value of $2,161. I'm currently up by $173, And the total dividends I received from Pepsi is $45.60. And quarterly, Pepsi pays me $14.56. I also have Coca-Cola on my portfolio, and I own 33.52 shares with a total market value of $2,049. Quarterly, Coca-Cola pays me $14.75, and the total dividends I received from Coca-Cola is $102. Besides the dividends of $55.53 that I reinvested, I also added $1,500 to my portfolio. This increases my position and my dividends to each of my holdings and adjusted my cost basis. About $227 has been allocated to my financial sectors, and these are Bank of America, Berkshire Hathaway, and American Express. Starting with American Express, I currently own 7.74 shares with a total market value of $1,160. I'm currently up by $143, and quarterly I receive $4.03. The total dividends I received from American Express is $16.22. Looking at Bank of America, I currently own 63 shares with a total value of $2,125. I am up by $158, and quarterly I received $13.98. The total dividends I received from Bank of America is $71.01. Quarterly, I received $13.98. Before we look at the rest of my portfolio, if you enjoyed this video, don't forget to hit the like button and subscribe. Now let's look at one of my favorite companies. I consider this one the ETF of my portfolio, and it's Berkshire Hathaway. I currently own 15.20 shares with a current market value of $4,222, and I'm down by $245. I'm consistently dollar cost averaging on my Berkshire Hathaway stock to increase my position and pull down my cost basis. Jumping to my information and technology stocks, these are Micron Technology, Microsoft, and Apple. Let's start with Micron Technology. I currently own 15.84 shares with a total market value of $871. Micron does pay dividends, but the yield is not that high, and this position is actually my play in the semiconductor space. Another major position in my portfolio is Microsoft. With a total value of $4,324, I own 16.75 shares of Microsoft. Microsoft does pay dividends, and quarterly I receive $10.38. So far, the total dividends I received from Microsoft is $41.52. Now, going to the number one company on my portfolio, and that is Apple. I own about 39 shares with a total market value of $6,056. Apple, like most technology companies, have a low dividend yield. The total dividends I received from Apple is $46.52. And quarterly I received $8.99. The low yield is okay because the growth that Apple provides to my investment is one of the best. Right now I'm up by $1,128, which is one of my highest capital gains so far. This growth has been fueled by consistently investing and dollar cost averaging and the reinvestment of my dividends. With the current down market, I am very happy to consistently increase my position in each of the companies that I own. One way to start the growth and the snowball effect of your investment is to reach your first $100 dividends. And in this video, we talk about how much money do you need to invest and how much time it would take to get your first $100 dividends.